Assalamualaikum and hi. So this is our group video assignment and this is our group members. Without further ado, let's get started.
For the case 1 Roman, it requires us to calculate the expected return and standard deviation for each stock. The expected return is derived from multiplying the probability with estimated return. For security A, the expected return is at 18.9%, security B at 14.7%, and security C at 19.9%. From the calculation shown, we can see security C has the highest expected return compared to security A and B. For the standard deviation, it derives from square root the probability times estimated return minus expected return square. For standard deviation of security A, it is at 2.66%, for security B 2.1%, meanwhile for security C at 2.43%. From the calculation made, it shows that security B contribute the lowest standard deviation, which represent low risk of investment.
For the second question, it asks to choose two portfolios that provide best benefit. Therefore, by assuming the investor is a risk taker, we choose security A and security C, since the expected return is higher than security B. Then, it wants us to calculate the expected return of portfolio by assuming there is equal investment in each of the two stocks. From the calculation shown, we divide the investment which is each of the stock. The rate is 50% multiply with the expected return rate and get the answer 19.4%. The last question of case 1 is asked for us to calculate the required rate of return of the portfolio if the CAPM holds. The first step is we need to calculate the expected return and get 12.4%. Then we need to compare with the expected return we calculate earlier. This table shows a comparison between them and proves that both of it is underpriced. So, the decision to be made is the company need to buy the stock.
And I will present case 2 question A. Rationality is when new information is released in the marketplace where all investors will adjust their estimate of stock prices in a rational way. When news of the crisis become public, panic selling of stock will happen. But even though there is a lack of trust and certainty in the capital market, panic selling may not be typical of reasonable investors. They would behave in an identical manner and take quick action to buy or sell securities. Their rapid and uniform action will ensure efficiency, while independent deviation from rationality is many investors are unable to think clearly because many questions about the global financial crisis remain unanswered. The majority of investors will be irrationally pessimistic. Some people, however, may remain irrationally optimistic. Prices may fall in a way that contradicts market efficiency because the irrationally pessimistic outnumber the irrationally optimistic, attempting to make countervailing irrationalities impossible. Can efficiency be assumed when investors are in the grip of extreme pessimism? However, the market can still be efficient, assuming that the action of those irrationally optimistic are offset by of those irrationally pessimistic.
Case 2 question B is to discuss briefly the effect of technical analysis and insider trading in Bursa Malaysia if it is semi-strong form efficient. So, semi-strong form market efficiency is when security prices reflect all publicly available information. Technical analysis is useless as it implies that the stock selection based on patterns of price movement will not provide abnormal returns. Insider trading in Bursa Malaysia will achieve abnormal profits as it reflects from private information and not public information.